Good morning. Thank you for joining us today for ROK's second half guidance. ROK trades under the ticker symbol ROK on the TSX Venture Exchange and ROKRF on the OTCQB. The company also has freely tradable warrants, which expire March of 2025 with a strike price of 25 cents. With us today from the company are President COO Bryden Wright and Senior VP of Land and Business Development, Jared Lukomski. After focusing most of Q1 on recompletions and operating cost reduction, the team is back in the field drilling, so we're excited to hear an update on what's happening there. Thanks for joining us today, and I'll turn it over to you guys, and then there'll be an opportunity for Q&A. Please enter your questions in the Q&A box. Good morning, Bryden and Jared.
Morning, Jess.
Morning, Jess. How are you?
Oh, all right. How are you doing? I was a little nervous this morning, a little jittery.
It's been a while since we talked to the markets. This is a unique opportunity for us to share our story. I think Bryden's got a bit of an update, and then we can, hopefully answer some questions.
Okay, sounds great. I'll let you guys go ahead, and I may jump in on a few things, but and then I have my list.
Jump in whenever you want. So basically, I just wanted to highlight, I guess, kind of how we exited 2023. I know we're already halfway through 2024, and we just came out with our second half guidance. But quick update. So, exited the year 2023 at about 3,900 barrels a day. Had a pretty active drilling program at the end of 2023. I had some, drilled some really successful wells toward the end and exited in that 4,700 BOE a day range. So it's a good end of the year. We pulled back our budget in Q1, really didn't spend a lot of capital, just focused on some reactivations, some recompletions, reduce our debt. And then we just started drilling again in Q2. So right now we're on our third location of 6. We've had some extremely wet conditions. I'm sure anybody that's operating in Saskatchewan knows how much rain we've had in the last 2 weeks, 3 weeks specifically. So we're sitting today just drilling our third location with 3 more planned. And then we'll release the rig for about a month, and then we'll pick up again in late August, and we'll drill an additional 7 locations. And so, it'll be an active year. We're excited, obviously, to drill some Saskatchewan wells again, some Frobisher wells, as well as some Midale locations where we'll tackle some of these multi-lats, which I think, people are starting to really, focus on versus, the Midale fracs. Obviously, the incentive that the government came out with for multi-lat drilling is a part of that. Right now we're sitting, probably at about 4,000 barrels a day. We did shut in just under 300 BOEs a day in Alberta. And, that was a decision with some partners to do so, given where gas prices are trading. We do have some strong hedges, which I can talk about on gas. But still, it was a good decision, I think, to shut in a portion of our production out there, bring it back on in the winter when prices are a little stronger. So, that's kind of just a really brief update. I'm happy to answer any questions, but, our guidance in terms of what, the second half looks like is about 24 million total CapEx on the year. So just under 15 million in the second half. We expect to exit in and around that 4,700 BOEs a day range, which is similar to last year. But if you look at our average, we're up 7-8% over the corporate average last year. And I think what's important to understand too is that's with significantly less capital required. Combination of a number of things, but we're spending just under 25 million versus 35 million last year. So it's a reduced budget, but yet we're still seeing some growth. Obviously, reserve adds and drilling inventory adds are a key focus of ours, and I can talk about that more as well. But overall, it's a I wouldn't say it's a super aggressive second half budget, but I think it's it accomplishes what we want to accomplish, which is, again, increasing our PDP, kind of focusing on certain areas where we are fairly unbooked, in our opinion, really trying to kind of grow that reserve book. So that's kind of the very, very high level. Happy to answer any questions, maybe, Jess, that you have. But really, it's fairly straightforward in terms of what our plan is for the second half here.
Okay. Well, and I want to congratulate you guys on, being really diligent when times are not great and adding some great production adds at, 5 to 5,000, 10,000 of flowing, which was awesome, and bring costs down. Now, what do you attribute to your, you're able to grow, like you say, about 8%, but with significantly less capital? Is that better well results? Is it lower costs or a combination?
Yeah, it's a combination. So our focus again is probably 75% of our wells this year will be Frobisher conventional, single dual leg. Those costs have come down. So if you think back, say pre-COVID, we were $1 million. It ballooned up to over 1.3. I think we're down to about 1.2 if it's a dual leg well, a little bit cheaper on a single. Costs have come down a little bit. Additionally to that is switching from fracked Midale wells to multi-lats, so you can take a well from say 1.8 to 2 million down to 1.5, 1.6. Obviously, IP rates and such will dictate capital efficiencies, but we haven't adjusted our type curves too much. We're still pretty conservative on our type curves. Part of the reason why we can spend less capital, a little bit less on flow lining, a little bit more on reactivations, again, which capital efficiencies are in that 3,000 to 7,000, per BOE per day. So obviously that capital goes a little bit further with some of these casing compressor jobs that we've been doing in the Midale, and just some simple reactivations of older units. And then if you look at kind of when we started drilling in 2023, we were down close to about 3,000 BOEs a day after all the transactions in Q1 and Q2. So we started at 3,000, 3,100 barrels, grew to 4,700. So it obviously took a little bit more capital to grow to that level. And now we're starting at that 4,000 barrel a day range, and we can put forth a little bit less capital to grow at that 5 to 10% range.
So streamlining everything, costs coming down, which they have across the board, just making those tweaks that can make a big difference to your costs overall, I guess, is really the answer.
Yeah, for sure. And operating costs, that was a focus of ours last year. So post transactions with Whitecap, our op costs for that first quarter were, I think, in that $36, $37 per BOE range corporately, the bulk of which was in Saskatchewan. So we were able to bring that down below $30 in Q4 and Q1 as well. So, we've been pretty diligent on OpEx reductions. The gas is a piece of the Saskatchewan landscape that adds about $7 to $8 per BOE on OpEx. And it's just, a result of the steel reef contracts, et cetera. So I think where we're sitting today, in that, say, $26 to $28 per BOE range is corporately is pretty good. And, we'll continue to tweak that. But obviously that does open up a little bit of extra capital.
I'll mention too, on the CapEx side, we've mentioned this before, the asset that we acquired, the infrastructure was largely in place. So again, that CapEx is mostly focused on drilling activities versus building new facilities, because that infrastructure is in place, which was appealing for that first transaction that we did. So again, our capital can really be focused on growth rather than building out the current infrastructure.
Mm-hmm. Mm-hmm. So you don't have that issue to deal with. Okay. Now, just back to your drilling program last year, you had some really good success, and how many locations do you think you added with, organically?
I don't know the count. I think it was about 10% of our inventory where we increased it by about 10%. Obviously, as we move forward, I think this year we're about 50% of our wells are in unbooked areas. So we are looking to, hopefully significantly grow that inventory and increase our PDP, and PUDs and probables, because, we are focused we drilled a couple step outs on our first two locations. We've got one on production, one we should be setting the jack any day now. But the next 3 after that, actually the next 4 after that, are all areas, and some of which was a part of the Whitecap acquisition, some of which was land that we picked up on our own or prior to the Whitecap acquisition. So I think as we go forward in 24, it's definitely a balance of kind of one exploration play, drilling some other features that we have some seismic control on, but again, really trying to take advantage of some of these areas with zero bookings.
Okay, so we should see a good bump in the reserve report this year if you have a good program.
With success, yeah. Fingers crossed.
Well, I mean, I know your skill set, so you guys are pretty good at drilling. So,
we'll see. Yeah.
Well, that's my own stock. Anyway, okay, just want to touch a little bit on gas prices, which, let's be honest, suck right now. And which is add in some gas. I mean, obviously there's Henry Hub prices have come up, but we haven't seen a follow through here in Canada. I mean, and that's, I think, on the AI, it's not really on a function of any real demand increase out of the U.S. and lower, and rig rates have come down, and a lot of shut-ins in the U.S. But what do you foresee over you have a pretty good guy on your board, I think, as far who has good color on gas prices. So what do you think as we see Coastal GasLink come on next year? What do you think is a reasonable price for natural gas?
Yeah, I mean, we're obviously an oil focused company, but when you look at our asset base, we have a reasonable amount of gas in our Kaybob asset, as well as solution gas in our Saskatchewan asset. So it is it does add cash flow at higher prices. I think we're pretty bullish on gas long term. I think if you just look at strip and you look at, you see gas, at $3-4 over the next, couple of years. I think that is where we envision it going. It's just a matter of when, in our opinion, not if. So if you look at, for instance, our Kaybob asset, where again, we're, I think 1,300 BOEs a day, and about 80% of that is gas. At $1 or less, it's not making really any money. Thankfully, we do have hedges in place, and those are very strong right now. Where we were able to hedge even summer months well above $2 per MCF Canadian. So I think the spot price today is sub $1 on AECO. So I think we're doing pretty good there. We have, $1 to $2 million of hedge gains at current strip over the course of this year on gas. So, for us, our gas is, we're looking at opportunities. I definitely don't think we're, going to turn into a gas company, but at the same time, there may be opportunities to pick up, some assets.
No, but it definitely impacts your revenue.
Absolutely.
And also brings, the higher prices would help with your costs. If you just what was I going to say? One question I did have from someone: percentage of your gas that's hedged right now?
It's about 70%.
70%. And then any hedges on for 2025 on gas?
We pulled back our hedges. So we have hedges in Q1 of 2025, but it's at a lower percentage. I want to say it's 55 or 60% of total production.
Yeah, 60% of production at an average price of $2.04 for Q1 of 2025. Hedges average for the balance of the year into Q1 at that $2.15 US on the gas side.
Okay.
Yeah, like our strategy for hedging, obviously we want it to be a little bit heavier this summer. And, this going back to even at the end of 23 when we were hedging through 24, we obviously view more strength in the winter upcoming, 24, 25. So we have reduced our hedges on gas. Remember, we do have a requirement within our bank line with NBF to have 75% of PDP hedged, and that can be a balance of gas and oil. So we've, tried to balance that out, sometimes heavier oil, sometimes heavier gas.
Yeah, that's okay. And you're still under your bank line still being reviewed right now, right?
Yeah, that should be finalized in the next 10 days or so.
Okay. And you don't foresee any major changes on their requirements? Just
No, there won't be anything significant. It should be pretty much the same as what we've had this past year.
In fact, Jess, my commentary would be that bank, National Bank, they've been very, very supportive with us. Recall they were part of the 4 private companies that we built and sold. They've been supportive with ROK on the public side of things. They're seeing some M&A potential in our jurisdiction, specifically Southeast Saskatchewan, that we're going to look at. And again, I think National Bank have been very supportive in terms of willing to consider using their balance sheet to watch ROK grow. So bank review not done, not expecting any surprises, but also we think there's a support level there to grow if appropriate.
And that leads me to my next question. I wanted to see what is the how is the M&A market looking right now? And certainly in your core areas, a lot for sale. And you're actively looking at stuff?
We haven't stopped looking. We'll continue to evaluate. Bryden mentioned the gas market. Specifically our Kaybob area, there's likely assets that we could look to acquire on the gas side of things. Again, our focus is oil. So we are looking at Southeast Saskatchewan opportunities. In my view, there is a bit of a delta between buyers and sellers given the volatility in oil prices. That's sort of stabilized in a range now in that $75 to $80 range, which I think will bridge the gap between buyers and sellers. We know of probably 4,000 or 5,000 barrels a day that is going to come to market over the course of that next 6 months. We will evaluate it. We'll try and use our balance sheets if we're successful in acquiring. We have limited desire to raise any capital at current prices, feeling like our share price is somewhat suppressed. So there's a bit of a balance there in terms of trying to do a deal that's smart for current investors and yet grow the company from a production standpoint as well as future potential in terms of growth as well. So products out there, we'll continue to evaluate it. Needs to be accretive on all the major metrics, and if appropriate, we're not afraid to grow and acquire assets.
That said, you still have a very deep inventory if you don't buy anything at this point. I mean,
yeah, we've identified over 200 plus drilling locations. We're continuing to acquire undeveloped land, whether it be at the Crown land sale or freehold leasing efforts. We've got 300 plus thousand acres that we continue to evaluate. So the needle's moving on our current asset, but if we're looking to expedite growth, M&A is certainly a way to do that.
Acquisitions will be done in core areas. We won't be acquiring to grow, period. We'll be looking for very strategic bolt-ons or something that significantly moves the needle, in Saskatchewan, or if the right, asset came along in Kaybob. But it needs to complement what we currently have. It needs to be better, equal or better on a number of metrics to what we currently have for inventory. But I would say we are acquirers in this market versus sellers. I really don't think, we want to sell at these multiples. Things are trading and selling at around PDP, maybe a slight premium to PDP or discount to PDP, really depending a lot on ARO, in fact. So, and upside. But yeah, we're looking at opportunities to grow both through the drill bit and acquisition.
Yeah, no, and you've proven yourselves to be, quite strategic and adept at doing assets and dispositions. I think you've proven that to the market very well, and been really good stewards of capital. Been very diligent with your balance sheet and pivoting when you need to pivot quite quickly. So it's been great to see. One little piece of good news I did read this morning is that all of these the fund flows have been continuing to be intact, right, and coming out of materials. We also, I think, are few getting hit a bit with the capital gains stuff as well. But it's I was reading an article this morning that all the tech stocks are in way overbought territory, and the smart money is starting to buy oil in size. So That was
Yeah, I read something similar earlier in the week about some larger U.S. institutions and funds looking kind of back into energy, but they haven't really been playing in for a decade or more.
Yeah.
So, I think long term, again, our stance hasn't changed. We're bullish. We do think that we're in some sort of I hate to use the word super cycle, but I do think we're going to see oil back above 100 at some point in the in the near future, and we're just building a good book of inventory, trying to run a good business and be ready to potentially transact at some point in the future. But right now, I think the opportunity is on the growth and acquisition side.
Yeah, no, definitely, and I concur with you. And we saw this in obviously the late 90s, early 2000s, where tech got so overbought, and then you start to see blow-ups, and then the funds start to flow back into harder assets.
Right.
So hopefully we're headed that way. I just thought it would happen earlier than now, but unfortunately, there's so many uncertainties in this election year. Biden.
Yeah, that plays a role. Absolutely.
Yeah. Biden doesn't have that many levers to pull to keep gas prices down, but
Jess, I sorry I interrupted. I share your sentiment though. Like, I thought the opportunity was going to be fleeting in terms of the ability to pick things up at certain metrics. And I always framed it as sort of a generational type opportunity to acquire assets at sub 2-3 times cash flow. And it still exists today, which is why when Bryden says we're on the acquiring side, that's really real. We think that time will change, and we want to be able to pick up quality assets as best we can, leading into that sort of transformational change where market or where cash starts to come back to opportunities like ROK.
Yeah, no, it's a perfect time for you to do that, and especially if we do have a bit of a lag because of the election, right? Like it gives you time to look at stuff and bid on stuff and actually get, and like you say, prices are sort of normalizing as well, and to buy something for PDP or just slightly above PDP is pretty phenomenal. So
it is, and hopefully in next year we have a government change in Canada, which could help drive capital back into our country as well.
That's been another problem, that's for sure. And then what else do I have? People continue to ask me about the NCIB, and correct me if I'm wrong here, but if you can only implement an NCIB if you are utilizing half your line. Is that correct?
Yeah, that's right. We've got restrictions and covenants via the bank that we can only do a share buyback, no different than the covenants related to hedges. So there's certain restrictions that the bank put in place, but you're right. Until that bank debt is retired to half, we have no ability to buy back shares.
Yeah, which is unfortunate given where your stock's trading at right now, which is but anyway. And then just on the Midale multi-lats, when do you plan to drill those two, and what do you expect for IP rates?
Yeah, so those will be in the second half of the year, probably in the fall. IP rates, they could range from 100 to 250 BOEs a day. So it really just depends on how, because this area has primarily been drilled with fracking, some vertical conventionals from back in the 70s and 80s, but I do think it can be exploited multilaterally. So I hate to throw out IP rate estimates, but we use 130 IP30 in our forecast for a tier 1 well, and about 100 on our tier 2. So again, I think we can outdo those rates. We're looking at probably 3-leg wells. I don't think we would go to 4 or 5. Really depends on how the first well goes. But it's either 2 or 3 locations. They'll be drilled in the fall, and hopefully we have some success there. We were disappointed with our Midale program last year. Drilled 2 wells that are a little bit more pressure depleted than we had expected, and so we're looking at less developed areas right now. horizontally, more virgin pressure. And I think those that can be exploited multilaterally and take advantage of some of these royalty incentives.
Okay. So if we look at the catalysts we have here, so the wells you've just drilled and the next three coming on, the Midale wells and the balance of your program, as well as some potential M&A. So there's a lot of levers to pull here that could certainly give you a lot of news flow and activity over the next few months, from what I can see.
Absolutely. I think it's going to be a busy year. I think we're constantly evaluating things, looking to grow. Obviously, hoping for a very successful drill program. We'll be coming out with an operations update likely in August, maybe earlier, but we'll see. We've had some delays on both getting wells on production and actually just moving rigs right now with the wet conditions. So we'll get an operations update as soon as we can. And yeah, it's going to be a busy year, but we'll continue to update the market, keep everybody in the loop on what we're doing.
Yeah, please. Yeah, and we'll certainly anyone, if you have any questions or you'd like what did I do there? A meeting with management or anything like that, happy to arrange. But I think you guys have so much going on, and you've just been hit along with the rest of the small caps here, and even the ones that are paid dividends are getting whacked. It's just been like forever. Every day you have one green day and then the rest are red for the rest of the week.
It's a tough market. I think at whatever we're trading at 25, 26 cents, I do think there's a lot of room for upside there. We're extremely bullish about our asset base and our inventory and where this goes. And I think if you believe in oil prices long term and the Saskatchewan basin, I think ROK is a great stock to own.
Yeah, I can't think of many better, to be honest with you. So keep up the good work, guys, and we'll keep in touch and keep people apprised of what's going on. There's no questions from the audience. Oh, I lied. Is there any way to attribute a value to the lithium assets?
I'll say that the lithium side of things, I think there's one third-party analyst, Echelon, who assigns roughly a 3 to 4 cent a share value to that. I think we continue to inch that asset forward. We're always evaluating what makes good sense for ROK shareholders. We're recognizing ROK is an oil and gas company focused on oil and gas, and lithium is this sort of unique option to push forward. But we don't necessarily have a true understanding of what value is today. We understand what third-party analysts put a value on, and ultimately it's worth what the market says it's worth if or when we ever look to liquidate it.
Yeah, now is not the time. I mean, you just started. I was going to actually ask before I ended the call, the Coke pilot started right now, right?
Yeah, I can give you a quick update on that. So we've been running the Coke pilot for about 2 months. We should be wrapped up at the end of June, early July. We've been able to, I won't give any numbers, but it's been a successful project from a lot of different standpoints. Coke's been out on site numerous times. Our other partner, Saltworks, out of Vancouver, which kind of run the downstream refining side of things, they've been in, part of the project as well. So we've learned a lot, and I think our partners at EMP are doing great things on the technology side and really understanding kind of what the best go forward plan is there. So we'll be, there'll likely be some updates and some press releases on that pilot over the next month. And then go forward, the plan is to drill 3 wells with our partners this year, and we'll be testing some vertical wells, testing a horizontal well. Actually, I believe it'll be the first horizontal well drilled into the Dupero for lithium brine in Saskatchewan. So that'll be exciting, and then that'll be tested, and we'll get some important data out of that. So there's lots of things happening. I think corporately, we understand that, again, oil's the focus. How do we maybe move that out of ROK, and we're working on a number of potential initiatives as we speak, and hopefully we have an update for the market in the next month or 2 on that as well.
Didn't Saltworks say that you have the best brine lithium that they've seen?
They have said that to us numerous times. So Saltworks is a group out of Vancouver. They've seen the majority of the brine across Canada. They've worked with companies like Standard Lithium and in the States. They've seen a lot of different brine in North America. I think they'd be okay with me saying that they've told us that our brine in Saskatchewan, specifically in our area of Saskatchewan, is the best from a balance between contaminants to lithium content, lithium concentration. So really, it's all about how much contaminant is in that brine from a hydrocarbon standpoint, organics, H2S, but all the way through to things like iron and calcium and silica. So it's their opinion that it's the best on our lands and kind of our surrounding lands. So that's great to hear. Moving forward, I think there's still a lot of things that have to happen. We're working with them on a feed study, which is basically like a full end engineering design study, kind of all the way from drill design through to refining. So that should be done later in the year as well. So a lot of things happening in the lithium world. Less hands-on for ROK, which is great. Significantly less capital requirements for ROK, which is important. So we'll provide an update as we can.
So that's another catalyst. Two other catalysts really coming there as well.
Yeah, for sure. We really don't think that anybody is putting that, 2, 3, 4 cents a share, 5 cents a share on the stock
at all.
No, if anything, it's more the latter, where it's a distraction in a lot of investors' minds, because we are an oil company. We believe our focus is oil and gas. We know it is, and this is something that is only going to bring value to shareholders, at some point. So.
Well, and there's two other things I want to mention on this. From what I understand from talking to you guys, is with the DLE process, contaminants are a big issue and becoming a bigger issue.
Massive issue. Like your operating costs and your capital cost requirements go up 10, 20, 30, 40% on a project based on these contaminants and the ability to get them out, or the cost required to get them out. And if they're not there, it just streamlines the process and reduces your costs significantly. Which
in your case, you've got pretty clean brine lithium, as opposed to people who are still producing a lot of hydrocarbons with their.
Yeah, the hydrocarbons are one of the biggest issues for sure. Just to really fully remove is a big challenge. And obviously jurisdictionally, Saskatchewan is the best, top 3, if not the best in North America to work, like infrastructure wise, royalty regime, the ability to work with landowners. So it's a lot of boxes are checked for our project.
Most definitely. And I understand there's been some interesting M&A happening around your area.
There has been. Yeah, there has been. 2 companies were bought, supposedly by the same buyer, and there's other wells being drilled actually in and around us currently. So yeah, there's activity in that space, which is great.
Okay, and just one quick thing with your asset base right now. Let's say you do no acquisitions, return of capital to shareholders. Have you looked at, I'm sure you've run those scenarios with your current asset base. Would that be around the 6,000 BOE a day mark?
So are you asking, if we converted into like a Divco, like what would we flatten out?
Yeah, or
sustainable?
Yeah.
I mean, depends on how long you want to run it. I think at our current asset base, yes, probably 5 to 5,500 you could run for, maybe 6 to 8 years, something like that. Really, I think some of these wells this year are going to be important for that type of run rate, in terms of these other areas that we don't have booked. Some of these, this one exploration area, things like that could really move the needle. But, it's not our intent to convert to a Divco. It's not really, I think we've been pretty forthright going forward. I guess, things can change over time, but right now, our focus is on kind of growth and creating a really solid package to one day sell. But again, we're not there yet. And I can't really put a timeline on return to shareholders right now. again, I think we've made it pretty clear that we're looking to acquire versus sell in the current conditions.
Yeah, and I don't think anyone really is buys you for that anyway. But it's just a question the odd person will ask.
Yeah, for sure. Yeah, absolutely.
So, have I missed anything, Jared? Bryden?
No, I think that's good. I think the one thing that I'll mention is we do have those warrants that expire in March of 2025. I've heard investors say it's probably a bit of a hangover in terms of where your stock's at today. Strike price at 25, trading in that 25 to 27 cent a share range. I just want to make it clear, ROK's doing things to advance its business to create value. We're not hyper focused on a March 2025 warrant date. Our intent is that those warrants are in the money and it brings in $28 to $30 million worth of capital that we can go out and either deploy in M&A, reduce debt, or expedite drilling. But, we are focused on creating value. Those warrants do expire March 2025. ROK's raised to date a total of $27 million. And we've done some pretty incredible things with $27 million. So we get excited about the potential of bringing in $28 million to go out and do things with. But again, that's largely out of our control. The market's going to decide if those warrants are in the money or not. But we are focused on creating value on our current shares and, with the expectation that we'll continue to move the needle on share price. So, just wanted to address the warrants that, the strike price is getting closer and closer by the day.
Mm-hmm. Most definitely. Well, I'm excited for the next few months, that's for sure. And I can't think of a better entry point really at this time. I mean, seasonally, Canadian oils always kind of trade down at this time of the year anyway, but it's usually a very good time in June, July to start picking away at them. And with your activity and with all your catalysts, I think the story looks phenomenal here. So great job, guys.
Thanks, Jess. Yeah, appreciate the support. Yeah, we'll continue to keep everybody updated as we move forward, and hopefully the rain stays away.
Okay. Well, don't drill in Calgary then.
Yeah.
Bye.
Hey, thanks, guys. Take care.